Well, time now to check back in with Mike Eppel for the latest in business news. And Mike, it looks like that Santa Claus rally has come a little late, but at least it has arrived.
Yeah, well, we'll see, Tammy. That's the best I can give you right now, because what we saw yesterday was remarkable, in as much as the Dow Jones and the S&P 500 both set single-day points gain records, with the Dow up more than 1,000 points, which worked out to almost 5%. Of course, that was preceded by multiple days of selling pressure before Christmas, so the so-called Santa Claus rally came a little bit late to the market this year, perhaps. But what we're watching this morning is the Dow Futures Index reverse course yet again. And it is pointing to a drop of about 350 points at the opening trade. And that is not a surprise. Anytime you see swings of this nature, from a market perspective, you're going to see a lot of volatility. It doesn't just all of a sudden settle down with the snap of a finger. And let's face it, what the market's dealing with right now is the continuation of the multitude of worries going into 2019, whether it is concerns about the economy, rising interest rates, the Mueller investigation, Brexit, the ongoing concern about whether or not the U.S.-China trade relations will get any better or worse next year. You name it, and markets are showing concern on multiple levels. Having said that, today's focus will be back on the retail sector, because over the course of the next few days, at least, we are expecting to get some anecdotal evidence, and if not some specific numbers coming in from the big name retailers. The first off the mark was Amazon, which said, yes, indeed, it was a record breaker for the world's biggest internet retailer. What they did point out, however, though, that most of the record-breaking sales items on the Amazon site were actually Amazon-made products, whether it's speakers or other devices. So it'll be kind of interesting to, again, see the specifics of what Amazon has to say, and that'll be tabulated and reported over the next little while. Coming up today, we'll also have a spotlight back on Bay Street. Hey, it's back to work after the two-day break for Christmas and Boxing Day. Of course, the U.S. doesn't have Boxing Day, which is why the markets were open there yesterday. And it'll be interesting to watch the energy-related stocks specifically today, because the price for oil popped higher by almost 10% yesterday and back down this morning by 2%. So the volatility is evident in the commodity trades as well. So, Roger, yeah, it's supposed to be a quiet time of the year. It hasn't been anything. It has been anything but for investors.
Bit of a roller coaster for everyone.
Indeed.
All right, Michael, thank you very much, sir.
You're welcome.
Have a great one.